Ever noticed how your favorite snacks cost more than they used to? Or how sometimes it feels like everything in the store is on sale, yet your money doesn't go as far as it did before? And have you heard people talking about how the stock market is doing really well, with more and more companies' stocks going up in price? What's going on with all of this? Welcome back to Stock Whispers, your gateway to investment brilliance. Are you ready for a roller coaster ride through the world of finance, where fortunes can soar as high as a Bitcoin rocket, or take a dive like a rock star after a wild night? Today, let's dive into the world of rising prices, shopping deals, and the bustling stock market to understand what we should keep an eye on the following days. Last week, the world of technology stocks was more like a roller coaster at an amusement park than the steady climb we've all been hoping for. Specifically, the Nasdaq Composite, which is like a big scoreboard for tech companies, didn't do so well. It went down by more than 1%. Now, that might not sound like a lot, but in the high-stakes world of stocks, it's enough to make investors reach for the antacid. And while the tech giants, often referred to as the Magnificent Seven, were tripping over their digital feet, something interesting was happening elsewhere. While the tech sector was having its little stumble, the rest of the stock market was partying like it was 1999. The equal-weighted S&P 500, which is like a broader, more inclusive club than the tech-heavy Nasdaq, celebrated its 7th consecutive weekly gain. This is a big deal because it shows that investors are starting to look beyond just the big tech companies for opportunities to make money. They're casting their nets wider, exploring new sectors and companies to invest in. It's like realizing there are more fish in the sea after focusing on just 7. This diversification could be the beginning of a new chapter in the market's story, suggesting that perhaps the best way to ride out the roller coaster of tech stocks is with a broader perspective to keep things in check. In the coming weeks, everyone's eyes will be glued to the latest financial reports, specifically the February Consumer Price Index. Think of the CPI as the financial world's thermometer, measuring the fever of inflation. Back in January, the numbers came in a tad hotter than everyone hoped, making a few eyebrows reach for the sky. It was a clear sign that smoothing out the inflation ride might be more like navigating a roller coaster than a leisurely stroll in the park. As for what's expected, the financial forecasters, or Wall Street's weathermen, are predicting the annual inflation rate for February to hover around 3.1%, mirroring January's figures. However, they're also whispering about a slight increase when you compare month to month. So it's time to grab your popcorn and settle in, because this is shaping up to be quite the show. Will the inflation rate give us a break, or is it time to tighten the belt another notch? This report isn't just numbers on a page, it's about how much more or less money will be staying in our pockets in the coming months. With a mixture of hope and an eye on the future, let's see what it brings to our financial tables. Well, after a bit of a stumble in January, where it seemed like everyone decided to tighten their belts after the holiday season, there's a buzz among economists that we might just be seeing wallets opening up again in February. These financial wizards, with their eyes glued to their crystal balls and spreadsheets, are predicting a 0.8% increase in retail sales for the month. It's as if consumers across the country suddenly remembered where they left their wallets, possibly encouraged by the arrival of tax refunds that felt a bit more generous this year. If these predictions hold true, we're not just looking at a slight improvement, we're talking about a potentially strong rebound that could have us all hauling shopping bags sooner than expected. This uptick in spending isn't just good news for those of us who enjoy a bit of retail therapy, it's a promising sign for the economy as a whole. A robust start to the year in consumer spending signals confidence and a willingness to part with hard-earned cash, whether it's on necessities or the occasional splurge. If the forecasts are spot on, shopkeepers might just be swapping their worried frowns for smiles, and the rest of us could be enjoying the kind of shopping spree that doesn't come with a side of buyer's remorse. So it might be time to dust off those shopping bags and prepare for a return to the checkout lines, with the economy potentially getting a much-needed jolt from our collective spending spree. However, last Friday, the stock market gave us a little shake-up. especially for those who've been closely watching the tech sector. Nvidia and some other companies that have been riding the artificial intelligence wave saw their stock prices take a tumble. It was like a sudden gust of wind that knocked over a few of the tech world's towering figures. This moment caught the attention of many because, let's be honest, when the tech giants sneeze, the rest of the market catches a cold. But this time, something different happened. Instead of the whole market taking a dive, other parts of it actually did quite well. The equal weight S&P 500 and the small cap Russell 2000, which are like the stock market's way of measuring how the average and smaller companies are doing, hit record highs. It's like the stock market party moved from the penthouse suite, where the tech giants hang out, to the main floor where there's a bit more variety in the crowd. This shift suggests that investors are starting to spread their love and money around a bit more, rather than just sticking with the so-called Magnificent Seven tech giants. It's as if the market decided to swap a diet consisting only of fancy, high-tech meals for a more balanced buffet that includes a bit of everything. What this means for us watching from the sidelines is that the dynamics of the stock market are changing. The fascination with just a handful of technology companies might be giving way to a broader appreciation for a variety of sectors. It's like realizing that there's more to the music world than just your favorite band. Suddenly, you're exploring all sorts of new genres and artists. Diversity, as they say, is the spice of life, and it looks like the stock market is starting to season its investments with a wider array of flavors. This shift could lead to a more robust and resilient market, proving that sometimes a change in the wind is exactly what's needed to clear the air. In the world of finance, where words like recession can send shivers down the spine of even the most seasoned investors, there's a noticeable shift in the air. Lately, the chatter during earnings calls has taken on a more optimistic tone, with fewer companies daring to utter the dreaded R word or recession. It seems like the doom and gloom forecasts are taking a back seat, thanks to a US labor market that's been showing off its muscles like a bodybuilder at the beach. This newfound confidence suggests that the economic landscape might not be as scary as some thought, with the potential for growth rather than decline. This positive shift is more than just good vibes. It's shaping up to be a sign of good things to come for the broader market. Investors who've been glued to the ups and downs of tech giants might want to broaden their horizons. Beyond the glittering allure of Silicon Valley, there are hints that a banquet of opportunities awaits those ready to look elsewhere. It's as if the market itself is rolling out a silver platter, inviting savvy investors to dine on the prospects of a rally. So if you've been wary of venturing beyond the familiar, now might be the time to consider diversifying your investment portfolio. After all, in a world where change is the only constant, betting on a broader market might just be the silver lining we've all been waiting for. Remember, in the rollercoaster world of investing, where markets do more twists and turns than a dancer in a tango competition, there's a piece of advice that stands out for its timeless wisdom. Diversification isn't just one of those fancy investment terms you hear thrown around in financial podcasts. It's the very parachute you'll need when the ride gets bumpy. Putting all your money into one sector or stock is similar to betting everything on red at the roulette table. Thrilling, sure, but not exactly what you'd call a sound strategy. Instead, spreading your investments across different sectors is like having a safety net, ensuring that if one part of your portfolio takes a hit, you won't be going down with the ship. Now, why is diversification likened to a slice of wisdom, you might wonder? Because just like a good piece of pie, it's satisfying, provides comfort, and most importantly, it's a smart choice. So, there you have it. A week packed with anticipation, from inflation reports to retail sales, and a market rally that's starting to spread its wings. Remember, the world of stocks is ever evolving, and staying informed is your ticket to making sound decisions. Thanks for tuning into Stock Whispers. If you enjoyed this video, give us a thumbs up, subscribe, and hit that notification bell so you never miss out on our expert investing advice. Until next time, keep listening to those whispers and let them guide you to your next big win. See you soon.